Good afternoon, good morning, or good evening, wherever you are in the world. Welcome to LBMA webinars. Today we're talking about ESG and mining. So we have Neil Harby from LBMA, Grant Beringer from Barrick Gold Corporation, and Edward Bickham from the World Gold Council. I will leave Neil to do a more fine-tuned introduction, but before I do, I just want to take you through some housekeeping. If you do have any questions throughout this webinar, please do let us know. If you are watching this back again, just email us through at ask@lbma.org.uk. You can also use this if you cannot find the Q&A panel at the bottom of your screen. We want to hear your questions and we'll pass this along to the panelists either during or after the webinar. So with that, Neil, if you would like to take the floor.
Okay, thank you, Taylor. Welcome, gentlemen, welcome, Grant, welcome, Edward. And thank you for joining us on this latest LBMA webinar, which, as Taylor said, is on ESG and mining. ESG is definitely at the forefront of what people are talking about at the moment. And that was really brought home by when we used to be able to travel. I was in Cape Town last year for the Indaba. And what really sort of was apparent was that ESG was front and center. Normally it would be sort of day 2 or day 3 when the diehards were still attending the sessions. But there was no doubt last year as it was, when you had your keynotes, you had your Mark Cutafanis, you had your Mark Bristows talking about ESG because it's important. And people have realized that, and really people are sort of engaging, and that's why on this webinar now I'm pleased to have Edward Bickham, who is a senior advisor to the World Gold Council on ESG issues. He played a key role in the development of the responsible gold mining principles, which I'm hoping he's going to be discussing a little bit later. And he's leading a work stream on artisanal and small scale mining, which is something that's very important to us at the LBMA as well. So welcome, Edward. I'm also joined by Grant Beringer, who's the group's sustainability executive at Barrick Gold. He's a geologist, and he has got a degree in geology, geography, and environmental management, and an MSc in environmental management. So he knows a bit of what he's talking about. He's got 17 years of experience in the environmental and social consulting within the mining industry, and has been extensively involved in the management and compilation of the environmental and social impact assessments, as well as with the compilation of environmental management plans, primarily in the resources sector across Africa. So, like I say, ESG is very important to the LBMA, and I'm really pleased to have these two gentlemen join me today. So, Grant, why is ESG important to Barrick Gold?
Yeah, thanks, Neil. I think it's probably important to start off with the fact that, you know, ESG for Barrick and the former Rand Gold, as you know, merged with Barrick just over 2 years ago, is nothing new for us. It's something we've been doing for a very long time. It's entrenched in our DNA, and we firmly believe that it's a part of our business because it helps us and adds value to our business. I think one of the key philosophies in our operating model, which we've adopted from Rand Gold, is the fact that we believe, and you know, quoting a phrase that Mark Bristow coined many years ago, is that our business is where the mine is, and so too is our commitment with ESG or sustainability, that we really drive it down to a site level where they have accountability, responsibility for ESG matters, because we believe that we can then respond quicker to our stakeholders on the ground. We don't see ESG as a corporate tick box exercise. Sure, there's oversight, and myself as the sustainability executive for the group provides that oversight, but you know, as I've often said, none of the executives in the Barrick team have offices. Our offices are at the mine sites, and we go through there often and engage with our team. So although we've given them that responsibility at a site level, there's very much an oversight on these aspects. But I think to answer your question more directly is we really believe that bringing these ESG aspects into the business just helps us make better decisions. It helps us de-risk projects. And certainly when we look at new opportunities, we do the thorough due diligence, and sustainability or ESG are one of those components that make sure that we can deliver that real value to our shareholders. So I think in a nutshell, that's why ESG is important to Barrick.
Yeah, thank you. And I think you make an important point there, is that it's not just something you've started doing recently. It's something that's always been there. It's only now it's starting to get the much higher profile that it deserves. And yeah.
Yeah, no, absolutely. I think, as I say, it is something, we've been doing for a very long time. I think it's been given a fairly snappy acronym now, much like the sustainability industry has many, this alphabet soup of acronyms. But, for us, it really was engaging with our host communities, our host governments, making sure that we are stewards of the environment, mitigating impact associated with that, and making sure that we're sharing that value that the host governments have given us the responsibility and entrusted us with. So I think those are some of the core components for us. I think also, now with the popularity, I guess, of ESG, the reporting on the data has become quite popular. And again, just to reiterate, it's not something that we do because it is popular. We believe tracking these aspects, the ESG aspects, really helps us make better decisions and drives internal improvement. And I think once you're doing that on the ground, it's easy to report out externally if you're getting it right at the operations.
Okay. Also, that's a good point, telling the story. Edward, the Responsible Gold Mining Principles, they've been launched, been around for a couple of years now. How are they being received by A, the industry, but B, the people who want to know, are the miners doing the right thing?
I think the response has been extremely good. They were launched about 20 months ago, and we're expecting to see conformance in about getting on for 20 months. So we're more or less halfway through the implementation period. And we didn't just sit down with companies and say, what should we be in them? We consulted very widely. About 300 organizations were involved in making input from governments, civil society, supply chain, as well as from the industry. So I think what they do is provide a pretty consensual view about what the key elements of responsible mining should be. And we're seeing not only take up by member companies of the World Gold Council, but actually by a significant number of other companies too. And so we're getting that take up from within the industry and a lot of support from investors. So the whole ESG agenda sort of made flesh by the 51 principles of the RGMPs. And that's helping investors, I think, to see where they should be focusing, and will also help them to look across the industry and get a sense of comparability.
Mm-hmm. And you're right, the investors need to be asking the questions, and the miners need to be able to answer the questions. So Grant, how have you found the experiencing of implementing the RGMPs?
Yeah, well, I mean, as Edward has mentioned, I mean, this is something that we've been involved in, you know, certainly as part of the World Gold Council, a member of the World Gold Council. We were included in putting the RGMPs together, and you know, myself personally being on the ESG task force has really been a valuable exercise in bringing these together. You know, to Edward's point, it wasn't just the membership that was consulted, but really a broad range of stakeholders, which I think was important. So, you know, we've been on this journey. It's still, we're still in it in terms of the implementation and the sort of the 3-year implementation that we've been given to implement. From our side, we've done the self-assessments now at each of our operations. And really that, I think, was a time for us to identify any gaps that may exist at a site level. But it's really been a great process for us to go through, not only because you know, I don't believe it's anything new again for us in terms of what the RGMPs are telling us, but it helps bringing it all together in one sort of standard or principles for not only as a corporate, but our sites to reflect on. Again, drives that internal improvement, most certainly. And then to Edward's point, I think it does give a lot of investors and stakeholders some confidence, the fact that these principles are going to be assured at some point. You know, we're going to get external third-party assurance against these, which I think, you know, in our industry holds a lot of water. And we're certainly fully committed to it. You know, as I say, I've done the self-assessments now, are preparing for that assurance review at the end of the year for us. And as I say, you know, we fully subscribe to the principles, a robust set of principles.
And like you said, I think this is an important point, is it is being externally assured. What do we do when that external insurance shows not necessarily a good story? If there's been challenges, how are we going to demonstrate that we take the challenges on board and address them?
Yeah, I mean, I think from our side certainly, and I'd be keen to hear what Edward says in terms of the World Gold Council's approach, but I think that's exactly why the principles were put together. You know, it does set the benchmark at which we believe companies should align to, but at the same time that we recognize that perhaps there are areas that require some more work. And I don't think that's unique to the RGMPs or the principles that exist. There's obviously other standards and principles out there that we align to. But I think, you know, to the point I made earlier around the fact that we have been given this time to implement, and it isn't an implementation, you know, within a year of them being released or published. It does give companies that time to reflect on those gaps that may exist and rectify those. And I think that was prudent, you know, in terms of releasing these. So certainly from our perspective, you know, where gaps do exist, you know, we work very hard to close those. But, you know, based on the self-assessments that we have done to date, you know, we've been very encouraged by how the sites have been living up to the principles even prior to them being released.
Yeah, absolutely. So I think although, as Grant says, the whole concept of high standards of environmental and social governance performance is certainly not new. What it's doing is providing a strong framework. It's certainly not easy, which is why the 3 years have been provided. And it will be demanding. Mm-hmm. Now, of course, from time to time, where things, once you've attained the standard, things may go wrong. Mm-hmm. And in those circumstances, the company is expected to be transparent, disclose that is something has happened, and with the support of their assurance provider, make clear what the timely period is for putting that right and bringing them back into conformance. So there is a route to forgiveness, but there's a high expectation.
Mm-hmm. And presumably the World Gold Council will play a role here in sort of sharing experiences between your members.
Most certainly, and Grant actually in his introduction talked about the fact we have a steering group, a task force, where a lot of sharing the experience takes place. So I think that's important. The World Gold Council itself is not a policing organization. It would be very difficult to be both an enforcer and a membership organization, and that could raise issues of perceptions of conflicts of interest. So the expectation is that suitably qualified independent assurance providers work with the company in checking on assurance. And I should emphasize it's assurance both at the corporate level and at the site level. So it's not just looking at nice policies, it's also about implementation. And then you get the report published, which makes clear whether or not there have been any problems and whether or not conformance has been achieved. And therefore, that has to be clear to downstream participants and other stakeholders.
Mm-hmm. If we can touch upon that, obviously the investors are important here. How are they judging you? How are they judging you? How do they rate your performance against the standards as a mining company?
Well, I think at the moment, obviously, it's still in the implementation phase. So there's going to be that disclosure around how we're performing against the principles. But I think in general, overall, we certainly have seen the fact that there is certainly a lot more emphasis placed on ESG. And, as you mentioned in the beginning of this webinar, there's a lot more focus on ESG, and we certainly welcome it. I mean, we've for a long time believed that ESG and sustainability, as we know it, should move from the margins to the forefront. So certainly we believe that it's a good thing. The fact that the investors and stakeholders in general are asking questions about sustainability and how companies conduct themselves in that space. I think where it becomes difficult for investors, though, is the fact that there are so many ways to measure companies now in terms of ESG. I mean, I referred to that acronyms earlier, and we have a lot of that, and sometimes it is quite difficult to know what good looks like. And are we comparing apples with apples in this ESG space? So I think, certainly principles like the RGMPs and others out there help define that a little bit better. I think there's still some work for us to do as an industry to also show what we believe are the most important metrics. I mean, just speaking from Barrick's perspective, we in 2020 in our sustainability report released an ESG scorecard, one that we came up with, one that we rated ourselves against our peers, but on metrics that we believed are important from a sustainability or ESG perspective. And there were two main reasons for that. The first is to show what we believe good looks like in terms of metrics. And also, again, to that point I made earlier, the fact that it really drives that internal improvement and something that we can measure each site by every quarter, which we do on our quarterly committee meetings. So I think, as an investor, I still think there's a lot of information they need to wade through in terms of understanding, as I say, what good looks like. So I think there's still some work to be done there.
Yeah, definitely. Edward, and any comments on how we're being assessed on how we're performing?
Certainly. So I think many seasoned mining investors have been used to looking at performance around ESG issues. They've also been used to issues coming on and off the agenda. And one of the things the RGMPs do is provide a sort of consistency of framework. So it isn't just because tailings is important this year, it's a means of looking at tailings year in, year out, looking at impact assessment, looking at the tools that companies are using, as well as some of their outcomes. And of course, issues like diversity and gender, tax, which I think 5 years ago, people were not asking many questions about, but have begun, partly as a result of our consultation, they are in there too. And I think with demanding expectations. So we've tried to be anticipatory. One of the things I think, though, that more generalist investors have been doing is to try to understand what really matters. And certainly some of the time, there is quite a lot of confusion between the different ratings agencies, all of whom have their own methodology. Nothing wrong with that, but it isn't always transparent as to why company X or company Y under one ratings agency get really good scores and under a different ratings agency, rather different ones. So I think there's some room for convergence in terms of the methodologies. On the other hand, having said that, the evidence is that the larger institutional investors are very much using the information from ratings agencies, from things like the RGMPs, but within the investor, using very much their own methodology for trying to measure these things, which I think is, in many senses, a tribute to the seriousness with which ESG is being taken. So they're not taking a boilerplate, they're seeing real advantage, competitive advantage, compared with other investors in understanding the industry better, getting their analysis better, just as they have done in terms of finances.
Yeah. I mean, maybe Neil, if I could just add on to what Edward was saying in terms of the ESG raters. I mean, I echo the sentiments there. I believe that, certainly as a mining industry, there's a lot of emphasis placed on the transparency around and disclosing information, and rightfully so. But I believe this same level of transparency then should be placed on those that are rating the companies within the industry. And to Edward's point, I think sometimes those methodologies are shrouded in mystery. And it would be quite useful, I think, for the companies, the mining companies and the raters to engage more. And that's certainly something that we found at Barrick, is that, shortly after the merger, one of the first things I did was engage with the ESG raters. And we now have a frequent discussion with them every 6 months. We have an ESG roundtable, as we call it. And I think that it's important that as an industry, again, we are providing that information, but also asking questions of the ESG raters. And again, as we've certainly seen it, many of our investors are taking this very seriously, and not necessarily just relying on those reports that are produced by the ESG raters, but actually looking into it themselves and engaging with us as mining companies. And I think there's huge value in that, and we certainly appreciate it. I think any opportunity that we're given to engage with our stakeholders or shareholders to provide more information around it, we welcome. And we certainly have done that a lot in the last 2.5 years. But I think, as I say, as an industry, we can play a bigger role in educating around what we believe are the most important metrics in our industry.
Yeah. And there's no reason really for the industry to be overly defensive. Certainly there are from time to time controversies and things go wrong. Mm-hmm. But actually, one of the things about the RGMPs is it also provides a framework through which companies can explain how they manage important impacts responsibly and what their contribution to society is. And that's really very important. We get a lot of cheap shots at the industry to an extent, and important to be accountable when things go wrong, but also to make people realize that actually, if we're going to continue living in the 21st century, there's a key role for mining and metals.
Mm-hmm. Yeah, and okay, we've covered some good ground here. So I know we had a quick chat about this before we spoke. You say mining has got a future because it must have a future because it's not just the mining, it's what it does to communities, it's what it does to people on the ground. How would you respond to people who say, why are we still digging up gold out of the ground? Why don't we just use what we've already got above ground? Why don't we use the recycled gold? Why do we still need to mine gold?
Well, I think a key thing here is that much of the gold is widely distributed around the world. Much of it is mined from developing countries. And in many situations, it's remote communities who have no other feasible route through to development. And so the opportunities provided by gold mining are very significant in terms of development. And it would be, frankly, arrogant for anyone to say you're not allowed to develop your resource. So I think that's important. And as you say, Neil, we were talking beforehand, the idea that somehow recycled is necessarily easier to prove its provenance or that it's been well produced is frankly not true. Whereas newly mined gold through initiatives like the conflict-free gold standard, the RGMPs, you're getting a lot of accountability about how the metal is now produced.
And we're not just talking about large-scale mining here, are we? Be something close to both your and mine heart is the ASM suppliers. Grant, previously we've heard of conflict between ASM miners and LSM miners. How do we solve that issue? Is it a problem?
I mean, I don't think if we fully understand artisanal mining or associated or working with large-scale mining, we recognize artisanal mining as a livelihood in many of the countries we operate. I think the issues creep in where artisanal mining changes to illegal mining, and I firmly believe there's a difference between the two. Yes. Illegal mining is when miners that don't have the permit come on to permit holders' land and start mining illegally. We recognize artisanal mining, as I say, as a livelihood in many of our countries of operation. It's been going on for years. I think there's an important role for large-scale mining to play in the artisanal side of things, and certainly it's something that we're passionate about. And along with Edward at World Gold Council, we've been working on establishing ways in which large-scale mining can engage further on this matter. I would add that it's not just large-scale miners that are going to solve the problem. There's a huge role to play from governments in this regard, and I think it's that alliance or partnership, both the government, the large-scale miners, and the artisanal miners themselves that need to come together, have those discussions. And some of the projects that I think we've looked at is how can we establish corridors for artisanal mining that doesn't necessitate them coming onto our mining permits and mining illegally. So that's something we're working hard. We've got a project in in Mali at the moment that we're looking at getting corridors in place so that we can facilitate that.
Yeah, and I think, sorry, before I hand over to you, Edward, it's very important that we distinguish between illegal mining and artisanal mining. They're not the same.
I mean, indeed, there's a huge variation in the context for artisanal mining the world over, including within countries, different circumstances. And there's a sort of continuum between artisanal mining, which is a way that some villages have augmented agricultural incomes over the years, may have been doing it for decades. Mining that is, as much of the world in many developing countries is part of an informal economy. And then there is illegal gold mining, which often involves inrush, influx of people, rather than being a local form of livelihoods. And then in other countries, clearly an opportunity for criminal groups, armed groups, to extort from communities, as we've seen over the years in the DRC, in Colombia, etc. Yeah. And I think one of the key things in the great majority of the world is to try and formalize the position of artisanal miners, responsible artisanal miners. And once you have them in the formal sector, it is much more difficult for them to be subject to that sort of extortion. It's easier for donors, refiners, etc., to work on mercury reduction. It's easier for the banking sector to provide banking services, which makes them less vulnerable. So there's, I think, the foundation stone for making progress is formalization, but certainly the industry, refiners, civil society all have a role to play too. Yeah. And we've just produced a report, he said, grabbing a moment for a quick advertisement on the role that central banks can play when they have domestic purchase programs of artisanal gold, and how they can use their influence to promote formalization, help with the due diligence requirements to avoid artisanal miners being effectively sidelined into illicit channels, and indeed help the miners themselves by giving greater predictability around prices.
Definitely. Thanks, Edward. We have got some questions, so I know we've used quite a bit of time, but I think this question is quite good. So this one's to you, Grant. What do you think of the ESG ratings offered by the Responsible Mining Index? Barrick appears on its latest edition, 2020, along with about 40 large-scale mines. Do you consider the index? Do you use it to improve your practices? You rank well, compliment, but there are possible improvements in terms of relationships with communities, health, air quality, and data disclosure.
Yeah, thanks for the question, and we do consider the RMI, and in fact, I had a conversation with the RMI earlier this week in terms of the preparation for their 2021 edition, which obviously looks at the 2020 data, and the edition that's being referred to there was based on our 2019 data. And you know, we really appreciate the RMI reaching out, and also the fact that we're able to reach out to them and have these discussions. And I think that certainly is an example to set in terms of you know, the ratings agencies at large. It certainly is a two-way relationship, and we do use that information to improve internally. I think in terms of the methodology, it's a little more transparent, and certainly the engagements we've had with the RMI have been very good. What we have looked at, and we took it up with the RMI shortly after the report was released around the community relationships. I think it's something we do pride ourselves in. Those, for us, it's all about the primacy of partnerships and engagement with stakeholders. And we felt that perhaps the information that we provided we could have given more, elaborated a little more, and it's always a difficult situation in terms of how much information one gives. But certainly this year, having had that discussion, we believe we'll have an improved rating. As was mentioned, it was a good rating. We thought it was fair in large parts, but certainly, to answer the question, a rating that we take seriously.
But that just shows you, as soon as I saw RMI, that means something completely different in the refiners space.
Yes.
Than it does in the mining space. And I
yeah, again, the acronyms.
Yeah. Grant, if you don't mind, another good question. Interesting in hearing more about the ESG roundtable. Great initiative. How did this come about, and what have been some of the key learnings from these quarterly meetings?
Yeah, so you know, for us, it was sort of when we came into, you know, and I come from the Rand Gold side of things. So when I say for us, you know, coming from that background, just the African context and into, you know, obviously a global company in Barrick. Yeah, we found it quite intriguing, the relationship between the company and the ESG raters. It was almost antagonistic, and you know, the way we've run our business, and you would have seen, you know, the way that Mark interacts with investors as well as community members is no different. You know, it's honest, and we believed that the ESG raters are stakeholders too, and we believed that conversation needed to happen. So, you know, this was pre-COVID time, so we were actually able to meet at our Toronto office. We invited a number of them that could attend personally, and we sat around the table to discuss some of these things. First of all, it gave us an opportunity to talk about our strategy, which changed significantly after the merger. And also, I guess to introduce myself, it was, you know, it's the first for Barrick to have an executive for sustainability, one of the first things that Mark did shortly after the merger. So it was a great opportunity to break that ice, but also then to set the foundation for us to have further discussions on some of these matters. Again, you know, the previous question around the information that we could give to these ESG raters is limited often to disclosures in terms of public disclosures or reports that you've put out. This was an opportunity for us to talk frankly with them, for them to ask us questions, and similarly for us to ask them questions. And we found it immensely useful. We've continued that. Obviously, unfortunately, it hasn't been face-to-face. Mm-hmm. But some of the key learnings, I think, for us is we haven't cracked it just yet in terms of the methodologies completely in terms of the ESG raters, but we're certainly moving in that direction, understanding what information they'd like to see from us. And I think maybe if I can speak on behalf of the raters, the learnings from their side is that I think the industry at large is willing to have these engagements, and we should be doing them more often.
Yeah, that I would agree. And also, it's a quick question for Edward is, we all seem to be, the LBMA, myself personally, is sort of more representing the refining side of things, who traditionally tended to be the focus. But I think what we also are seeing now is we're seeing the entire supply chain coming together. And I certainly think the fact that the World Gold Council and Barrick are on this call with the LBMA really sort of illustrates that we are working together. So, Edward, you know, are we going to carry on working together? Are we going to get this right?
I certainly hope so, Neil. And thank you very much for inviting me today. And your colleague Alan Martin was on the panel we were doing at the OECD around the central bank's report. Of course, we must work together. We've worked together actually around the OECD agenda over many years. But it's very important, I think, for end users to see the gold sector as joined up rather than two islands. We have to explain how the two elements, the mining, the refining, work together, how they communicate. We've talked many years around the importance of the conflict-free gold standard and your responsible gold guidance now, the responsible gold mining principles and the responsible gold guidance, and ensuring that there's a clear and transparent handshake between the two processes.
Yes, so sorry guys, I knew this was going to happen. I would love to carry on, but Taylor is being Taylor. Hello, Taylor. She says we have to stop talking. Taylor.
Thank you. I resent that statement, Neil. No, guys, it's been really great, and thank you very much for joining us. And obviously, there's much more to talk about, so we'll maybe have to get you on another time to finish the conversation. Neil's looking at me panicked. Maybe in a while, but it's been really great to have you on board. Just a little bit of housekeeping as we do wrap up. If you do have any questions that, again, like I said, that we didn't answer, you're listening back to this later, you want to send those through to us, please do that at ask@lbma.org.uk. We'll send them across to Grant, Edward and Neil for you. We do have some upcoming webinars and events, which is awfully exciting after such a long time away. So in 2 weeks, on the 10th of June, we have LBMA trade data, so volume by price insight. So we do have Adrian Ash and David Bornell coming back, returning to the screen. This time they'll be joined by Seda Latosh from Refinitiv. So do register for that if you haven't done so already and you have been keeping up to date with the trade data webinars. We also have some exciting events. So I did say this last week, but I'm over the moon about it because it's been such a long time. We do have the virtual AGM on the 1st of July. So if you are a member, we will be sending out some registration links within the next week. And owing to government restrictions, we are planning to host a London Summer Social for our members as well. So keep your eyes out for details about that and a registration link for that too. In September, we do have our LBMA LPPM Global Virtual Precious Metal Conference. So the details about that will be coming out shortly as well. And again, as long as the government says it's okay, we will be having a London networking reception on Monday the 20th. So that conference is the 20th to 21st. So please register for those when the details do come out. We hope to see you there. And if you do have any questions about any of the events, webinars, please do either find us on social media or email through to us, or you can see our lovely website, which actually recently has a new exhibition, the Wonders of Gold exhibition, curated by Stuart Murray, the GDL consultant for LBMA. And with that, I would like to wrap up again. Thank you, Neil. Thank you, Grant. Thank you, Edward, for joining us. And I hope you have a lovely afternoon and a lovely weekend ahead.
Yeah, so thanks, Taylor. Again, personally, thank you, Edward. Thank you, Grant. And one last point. Our chairman, Dr. Paul Fisher, did do a webinar earlier on this year on sustainable finance, which is available on the website. Very relevant, very good, and just keeping the conversation going about what sustainable means. So once again, thank you very much, and have a good day.
Thank you.
Bye.
Bye-bye.